Palantir Technologies experienced a rise of over 3% in its stock price after two significant developments boosted investor confidence. The first was a new coverage initiation by UBS, and the second was an announcement regarding the extension of Palantir's collaboration with the United States Army. This upward momentum in the stock followed a decline of 3.9% on the 18th, which was attributed to the market reacting to assertive and hawkish comments made by the Federal Reserve. These contrasting movements highlight the volatility surrounding Palantir's stock and how quickly market sentiment can shift due to external factors and company-specific news. UBS analyst Karl Kierstead initiated his coverage of Palantir Technologies with a neutral rating, assigning a price target of $80. While a neutral rating might not initially seem overly bullish, Kierstead's detailed analysis painted a highly optimistic picture of the company's core strengths and long-term potential. According to his report, Palantir is expected to achieve notable revenue growth in the years 2025 and 2026, surpassing current market expectations by as much as 2 percentage points. This projection underscores the significant potential of the company's offerings, particularly as they become more intertwined with the rapidly evolving field of artificial intelligence-powered data solutions. Kierstead's assessment was not merely speculative, it was informed by direct discussions with 17 of Palantir's largest customers. These conversations were aimed at providing clarity on the core functions of Palantir's platform and its potential to generate value for clients, especially in the sectors where data-driven decision-making is becoming increasingly critical. The analyst emphasized that Palantir's unique position in artificial intelligence and data analytics provides it with a significant competitive edge. However, despite his positive view of the company's fundamentals and growth potential, Kierstead expressed caution regarding its current valuation. Palantir is currently trading at 49 times its revenue and 124 times its free cash flow, based on projections for 2025. Such elevated valuation metrics, while indicative of high investor expectations, also pose a challenge in justifying the stock's pricing. This valuation concern was the primary reason behind Kierstead's neutral rating, as he acknowledged the difficulty in reconciling the optimistic growth outlook with the company's lofty trading multiples. In addition to the UBS coverage, Palantir announced an extension of its long-standing partnership with the United States Army. This agreement is a significant milestone for the company and is valued at approximately $400,700,000 for a period of up to 4 years, with a maximum potential value of $618,900,000. The partnership will focus on supporting the Army data platform through the Army Vantage capability, reinforcing Palantir's critical role in providing cutting-edge data analytics and operational solutions to the military sector. This extended collaboration with the United States Army underscores Palantir's ability to maintain strong relationships with government clients, a key pillar of its business model. By continuing to secure substantial contracts within the public sector, Palantir not only strengthens its revenue base, but also bolsters investor confidence in its long-term growth prospects. Government contracts, particularly those related to defense and national security, tend to be lucrative and stable, providing Palantir with a reliable stream of income. Additionally, the strategic importance of Palantir's work with the military highlights the company's relevance in critical areas such as national defense and intelligence, further cementing its reputation as a leader in data analytics. Investors appear to be encouraged by the combination of UBS's coverage and the news of the extended Army contract, resulting in a notable uplift in Palantir's stock price. This positive momentum highlights the importance of both analyst opinions and major contract announcements in shaping investor sentiment and influencing stock performance. The company's focus on leveraging artificial intelligence and its strong foothold in both the public and private sectors position it as a key player in the data analytics space. However, balancing growth with valuation will remain a challenge as the company seeks to justify its premium trading multiples. In other news, Palantir Technologies has established itself as a major player in the market this year by reaching several critical milestones. One of the most notable achievements was its inclusion in the prestigious Standard & Poor's 500 index this past September. This development underscores Palantir's growing influence and importance in the economy. The company's financial performance further highlights its remarkable year. Over its 20-year history, Palantir has consistently demonstrated resilience and innovation, but its most recent quarter stands out as particularly impressive. For the first time, Palantir achieved its highest profit ever, marking a pivotal moment in its journey. This achievement was fueled by consistent double-digit revenue growth over consecutive quarters, showcasing the strength of its business model and the growing demand for its services. The stock's performance reflects these accomplishments and more. Palantir is currently on track for an extraordinary annual gain of over 340%, which solidifies its position as the best performing stock in the Standard & Poor's 500 for the year. Such a staggering increase in value raises an important question: what is driving this unprecedented success? The answer lies in Palantir's innovative approach to data and technology. The launch of its artificial intelligence platform last year has proven to be a game changer for the company. This platform has rapidly gained popularity among both government and commercial clients thanks to its ability to aggregate and analyze vast amounts of data. By providing actionable insights, Palantir's technology enables its clients to make better decisions, improve operational efficiency, and unlock new opportunities for growth. The impact of these tools is often transformative, delivering results that many would describe as revolutionary. But the momentum for Palantir doesn't stop here. Even as we approach the final days of the year, there is still excitement surrounding the company's prospects. Just last week, Palantir was invited to join the Nasdaq 100, a milestone that further validates its growing importance in the market. The company will officially join this prominent index on December 23rd, raising the question of whether investors should act now and buy the stock before this key event. To answer that question, it's worth taking a closer look at Palantir's progress over the years. The company has long been associated with its work for government clients, using its platforms to support critical operations and decision-making processes. However, in recent years, Palantir has expanded its focus to include commercial customers. This shift has been greatly accelerated by the success of its artificial intelligence platform, which has attracted a diverse range of businesses looking to leverage the power of data. Major companies such as United Airlines and Wendy's have adopted Palantir's platform to optimize their operations and make strategic decisions. These tools have enabled them to identify cost-saving opportunities and improve efficiency, often saving millions of dollars. This shift towards serving commercial clients has been a major growth driver for Palantir. In fact, U.S. commercial customer revenue has risen significantly, climbing by over 54% in the latest quarter alone. The growth in Palantir's commercial customer base over the past 4 years paints a striking picture. Just 4 years ago, the company had 14 U.S. commercial customers. Today, that number has surged to nearly 300, reflecting the strong demand for its innovative solutions. At the same time, Palantir has not lost sight of its roots. Government clients continue to play a critical role in its success, with U.S. government revenue increasing by 40% in the most recent quarter. This balanced growth across both segments demonstrates Palantir's ability to diversify its revenue streams while maintaining strength in its traditional markets. Another noteworthy point is the scale of investments being made by Palantir's clients. In the most recent quarter, the company closed over 100 deals valued at more than $1 million each. This highlights the confidence that customers have in Palantir's technology and their willingness to make substantial commitments to their partnerships with the company. But should you invest in the stock before its entry into the Nasdaq 100? One factor to consider is the behavior of funds that track the performance of the index. These funds will need to purchase Palantir shares to replicate the composition of the Nasdaq 100, which could provide some support for the stock price. However, while this is a positive development, it is unlikely to trigger a dramatic surge in the stock's value. It's also important to take a long-term perspective when considering an investment in Palantir. Successful investing often involves buying and holding stocks over extended periods, allowing you to benefit from the company's growth and weather short-term fluctuations. This means there is no urgent need to rush into buying Palantir shares before its Nasdaq 100 debut, especially if you are focused on long-term returns. Now let's address a key question. Is Palantir a strong buy at its current valuation? The main concern for some investors is the stock's high valuation, as it trades at 200 times forward earnings estimates. While this may seem steep, a closer look at its forward price-to-earnings to growth ratio provides a different perspective. A ratio above 1 typically indicates overvaluation, but Palantir's ratio stands at 0.6, suggesting that it remains an attractive choice for growth-oriented investors. In conclusion, even after delivering substantial gains this year, Palantir continues to present a compelling investment opportunity. Its strong performance, innovative technology, and balanced growth across government and commercial sectors make it a standout choice in the artificial intelligence space. Whether you decide to invest before or after its inclusion in the Nasdaq 100, Palantir offers significant potential for long-term growth. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.